Tesla, it is a leader in, a lot of the conversation right now is really this software-based AI, and it should be about that because ChatGPT is the fastest application to 100 million users. But I think AI applied to the physical world is something that's almost overlooked, and we think it's a massive opportunity for Tesla. And you mentioned full self-driving being one of those, powering an autonomous robo-taxi network, and we think that opportunity is so big. That's why Tesla is a top name across many of our funds.
Tesla forecast ramping up to 100 exaflops of AI training capacity by Q4 2024. That's a huge number that implies an over 20x scaling from the 4.6 exaflops disclosed at AI Day 2022, 14K NVIDIA A100 GPUs, and over 50x in the A100 capacity discussed in 2021. This is what ARK Invest Director of Research Next Generation Internet Frank Downing said in a recent tweet. In the same tweet, Frank explained that this implies a compound annual growth in training capacity of 273% from 2021 to 2024 on the premise that Tesla hits their target based on the 5,760 A100s they disclosed at CVPR 21. Quoting Frank's tweet, ARK's CEO Cathie Wood said, "If successful, this incredible ramp in compute will increase the odds that Tesla will be the first to roll out a nationwide autonomous taxi platform, which we believe is a winner-take-most AI-driven opportunity with SaaS-like margins." It's no secret that Cathie Wood is a strong supporter of Tesla. In fact, Wood is extremely bullish on Tesla's robo-taxi fleet. Despite and amidst market chaos and uncertainty, Wood remained to be a true Tesla bull. Wood believes that Tesla CEO Elon Musk has the vision to make Tesla one of the largest companies in the world by creating a fleet of autonomous vehicles or robo-taxis. "We think that the robo-taxi opportunity globally will deliver $8 to $10 trillion in revenue by 2030, Wood said in a recent CNBC interview, calling it one of the most important investment opportunities of our lifetime. Wood argued that Tesla stock will surge over 1,100% to $2,000 per share by 2027 as its planned robo-taxi fleet rolls out, giving the company a market cap of over $5 trillion, nearly double that of the world's largest firm, by that measure today, Apple. Even in her bear case, Wood expects Tesla stock to hit $1,400 in the next 5 years. "We want Tesla to scale its units because each one of them represents the potential for a robo-taxi and a robo-taxi fleet," Wood said. The ARK Invest CEO, who has put nearly 10% of her flagship fund's holdings into Tesla stock, believes that the EV giant could turn its fleet of vehicles into robo-taxis without the need to retrofit additional sensors or cameras. This would enable the company to operate with a software-as-a-service SaaS model, earning recurring revenues through higher-margin, full self-driving software subscriptions to customers rather than purely vehicle sales. ARK Invest analyst explained in a research report that their price target relies on this prospective robotaxi business, accounting for 25% of Tesla's revenue by 2027 and nearly half its earnings. Wood said she sees the transformative potential of Tesla in the realm of autonomous vehicles, stating, "We think that Tesla is the biggest AI play out there, the biggest beneficiary." She explained that the company is focusing on the convergence of 3 key areas: robotics, energy storage, and artificial intelligence. So autonomous taxi platforms are what we're talking about here. Autonomous vehicles are robots. They will be electric and they will be powered by artificial intelligence, she said. She envisioned the growth trajectory as not just linear but exponentially compounded, stating, "Each one of these is growing exponentially and then you have them feeding each other. So S-curves feeding S-curves. This could be explosive growth." Wood was optimistic about the global revenue of the autonomous taxi platform business, predicting, "We believe that globally the autonomous taxi platform business will grow from nothing today to $8 to $10 trillion in revenue in 2030 or thereabouts." In comparison, the U.S. economy's size is $22 trillion, underlying the robotaxi's potential as one of the biggest growth engines and growth trajectories in history, Wood said. When asked if Tesla could succeed without Elon Musk, Wood expressed her confidence in the groundwork laid by Musk. "I think he has set it in motion, certainly the EV side in motion," she said. Wood's insights have a significant bearing on the future of transportation and the role of companies like Tesla. The exponential growth she predicts could lead to major economic shifts, and her faith in Tesla's position might influence investor attitudes toward the company. She also emphasized Tesla's competitive advantage, stating, Tesla is in the pole position. Why? Well, first of all, the biggest reason is it has more data than all the other auto companies and tech companies touching transportation combined. Orders of magnitude. Although it has now been 6 years since Musk promised the Tesla robotaxi, Wood is not losing hope and is just becoming more and more optimistic as the years go by. In a webinar, Wood predicted that EV sales will go to 60 million in 5 years, 3 times more than what she said is the consensus estimate. She described Tesla's plans for autonomy as much more important than its EV strategy. About 2/3 of ARK's $2,000 price target for the shares over the next 5 years is because of autonomy. Tesla, from a thought leadership point of view, is leading the charge, so to speak, in this movement towards autonomous electric vehicles. Wood said, as of mid-June, Tesla once again led the industry in battery electric vehicle sales in the first quarter, capturing 24% market share. Tesla also achieved the highest operating margin among volume automakers last year, something CEO Elon Musk attributes to unparalleled manufacturing technology. More importantly, management believes deliveries will increase at 50% annually over the long term, and CFO Zach Kirkhorn believes the company will retain its industry-leading margins in the future. One reason for that confidence is the new vehicle assembly system Tesla plans to debut at Gigafactory Mexico in 2024. The system promises to cut production cost in half and reduce its factory footprint by 40%. Management also believes full self-driving FSD software will be an important source of profitability in the future. FSD software can be sold at 100% gross profit, and it will power the robotaxis Tesla plans to mass produce in 2024. After adding a robotaxi to its arsenal, Tesla will likely launch an autonomous ride-hailing service, and investors have good reason to think the company will be successful. Musk says Tesla is one of the world's foremost artificial intelligence AI companies due to its expertise in software and hardware. Tesla has more autopilot-enabled vehicles on the road than its peers, meaning it has more autonomous driving data than any other automaker. That gives the company an edge because data is the backbone of AI. Additionally, Musk says the supercomputer that powers its FSD platform is the most efficient inference computer in the world. Overall, Tesla has a strong competitive position in the BEV market, and the company is arguably a leader in autonomous driving technology. That positions Tesla for strong growth in the coming years, and its current valuation of 10 times sales looks reasonable in that context. However, Tesla still trades at a considerably higher valuation compared to other automakers, indicating that Wall Street has big expectations. Investors that believe in the robotaxi narrative should buy a small position in this growth stock today, but investors that lack confidence in that narrative should steer clear of Tesla. Here's some food for thought, though. Tesla has been and remains to be in the lead position in the EV space. The shift to batteries from combustion engines has been hugely disruptive to the auto industry, and Tesla remains the global EV leader. In a CNBC interview, Cathie Wood said that Tesla could hit $2,000 by 2027. In a bear case scenario, Wood sees Tesla stock hitting $1,400, while her bull case sees the automaker surging to $2,500. Her outlook is based on Tesla potentially taking advantage of an expected robotaxi boom, which Wood believes could deliver $8 to $10 trillion in revenue by 2030. It is one of the most important investment opportunities of our lifetime, Wood said of robotaxis. Just so you know, Musk first revealed plans to develop a fully autonomous self-driving robotaxi in 2016. While it's still not on the road 7 years later, he just hinted it's closer than ever and that it might even be ready this year. In a wide-ranging interview with CNBC's David Faber in mid-May, Musk shared his vision for the project, and serving as a self-driving ride-hailing platform appears to be a big part of the value proposition. To be clear, the robotaxi won't necessarily be a new Tesla model. Instead, Musk's goal is to have as many customer-owned Teslas serving as robotaxis as possible by having them install the company's self-driving software. In the interview, he talked about how the average passenger car is used for just 10 to 12 hours per week, spending most of its time parked at its owner's home or place of work, which makes the value proposition incredibly ineffective. By installing autonomous software, those vehicles could spend that idle time out on the road as part of a ride-hailing network, earning money for both the owner and Tesla. Musk touched on the potential business model, describing a revenue split that could run 50-50 or even 70-30 in favor of the car owner. This could transform Tesla's financials because instead of just manufacturing a vehicle and selling it with a gross profit margin of 25%, each car would potentially earn a margin of 70% or higher over time. It's no wonder Cathie Wood is very optimistic about this. Subscribe for more.